Welcome back. NIO just exploded, again. On July 22nd, the stock surged more than 10%, closing above that psychological $5 mark for the first time in a while. It was a high-volume, high-momentum session that followed an already strong day yesterday. If you've been following this series, you know we've been building toward a moment like this. But the key question now is, was this just a technical breakout, or are we seeing a real shift in sentiment that could carry NIO into a new phase? Let's unpack what happened. Today's move wasn't just random. NIO opened strong and never looked back, running from the low fours to over $5 a share. Volume was massive, more than 130 million shares traded. That's more than triple the 50-day average. It's not just retail traders playing the swing. This kind of volume suggests institutional interest, short covering, and possibly even some algorithmic momentum triggers. Now, yesterday we saw NIO rise nearly 3%, and at that point we noted several things: margin improvement, the 30-day catalyst watch from Citi, and building anticipation around new vehicle launches like the Onvo L90 and the Firefly Compact. But what happened today is different. It wasn't just a continuation, it felt like ignition. And that's important. One of the biggest drivers behind this rally is growing confidence in NIO's fundamentals. Q1 numbers showed clear improvement. Gross margins rose to just over 10%, revenue was up 22% year-over-year, and gross profit nearly doubled. That's not speculative hype, that's actual execution. When you see a company move from burning cash to building operating efficiency, markets respond. And today, we saw that response in real time. Then there's the infrastructure piece. NIO's battery swap network, something we've talked about extensively, is starting to become a real strategic asset. Over 3,100 stations are now live, and around 20% of those are operating at or near break-even. In Shanghai, some are reportedly already profitable. That's a huge deal. It flips the old argument on its head. For years, critics said battery swapping was a cash drain. But if NIO turns this into a recurring, scalable revenue stream, it changes the narrative entirely. And let's not forget Citi. Their recent investment into Miratori, NIO's battery swap subsidiary, adds weight and credibility to the model. It's not just NIO saying battery swapping works. China's largest battery manufacturer is now on board. That gives investors a reason to believe this isn't a gimmick, it's part of a viable long-term business strategy. So that covers the fundamentals and the infrastructure side. But today's rally also had a very technical dimension. NIO's short interest has been sitting around 9 to 10% of the float. And over the past 2 weeks, borrow fees have risen, availability has tightened, and short sellers have started to sweat. Today's surge likely triggered a significant wave of short covering. When a heavily shorted stock breaks through a level like $5 on high volume, the algorithms start to fire, the retail traders pile in, and suddenly you have a short squeeze unfolding in real time. Is this the big squeeze? Too early to tell. But the setup is there. And days like today make it much harder for shorts to hang around comfortably. If NIO strings together another strong session or two, especially on news, we could see some real fireworks. Looking ahead, the most important thing now is follow-through. If this move is going to stick, NIO needs to deliver on the stories behind it. That means showing momentum in vehicle deliveries, especially around the Onvo L90. It means updating the market on swap station profitability and rollout plans. And it means reinforcing cost discipline and margin progress in the upcoming Q2 earnings. At the same time, analysts are paying attention. Citi's short-term 30-day catalyst watch has clearly caught fire, and we wouldn't be surprised to see other institutions start raising their price targets or initiating bullish coverage if this momentum continues. 1 or 2 good headlines could be enough to turn cautious interest into renewed conviction. Now, let's talk about what could go wrong, because it's important to stay grounded. NIO is still not profitable. It still faces intense competition in the Chinese EV market from companies like BYD, Li Auto, XPeng, and of course, Tesla. And on the global stage, expansion remains a slow and expensive process. A lot of this rally is driven by expectations. If those expectations aren't met, whether it's weaker than expected guidance or disappointing delivery numbers, this could pull back just as fast. But here's where things feel different. The underlying trend has shifted. NIO isn't just surviving, it's starting to reassert itself. Margins are improving. Execution is tightening. Infrastructure is working. and retail and institutional sentiment are aligning for the first time in quite a while. So what should we be watching now? First, keep an eye on volume. If we stay above 100 million shares traded per day, that suggests real conviction. Second, look for news from the company, whether it's pre-sales data, model updates, or infrastructure expansion. Third, monitor short interest. If borrow fees continue to rise and short interest starts to decline, it's confirmation that the squeeze is in motion. And most importantly, listen to how the company frames its Q2 earnings in the coming weeks. If they reinforce the message of discipline, growth, and future profitability, this rally could just be getting started. That's it for today's update. NIO exploded upward with a 10% gain, but behind that number is a story of momentum, execution, and shifting belief. Whether you're already long, just watching from the sidelines, or considering an entry point, this is one of those moments where it pays to stay alert. Thanks for tuning in. I'll be back soon with more as this unfolds. Until then, stay sharp and keep your eye on NIO.